You know what gets Wall Street more excited than a tech IPO these days? Defense contracts worth billions of dollars and production lines that can't keep up with demand. And right now, one defense giant just announced a deal that's about to change everything in the missile defense game. Lockheed Martin just struck a 7-year agreement with the Pentagon to triple their production of Patriot interceptor missiles. We're talking about ramping up from 600 missiles a year to 2,000. That's not just an incremental increase. That's the complete transformation of their production capacity. And if you think this is just another government contract, you're missing the bigger picture. This is a $50 billion opportunity hiding in plain sight, and the smart money is already positioning itself. Let me break down exactly why this matters to your portfolio. The Patriot Advanced Capability 3 Missile Segment Enhancement, or PAC-3 MSE, as the industry calls it, isn't just another weapon system. This is the interceptor that's been knocking Russian Kinzhal hypersonic missiles out of the sky over Ukraine. We're talking about missiles traveling at 16,000 kilometers per hour, and the Patriot system is taking them down. When Ukraine deployed these systems, they fundamentally changed the calculus of modern air defense, that Russia's most advanced weapons, the ones they claimed were unstoppable, started getting intercepted with alarming frequency. Now here's where it gets interesting from an investment standpoint. Lockheed delivered 620 interceptors in 2025. They increased production by 60% over the past 2 years. But demand is absolutely crushing supply. Ukraine alone is operating up to 10 Patriot systems and burning through interceptors at a rate nobody anticipated. Every single one of those interceptors costs about $4 million. Do the math on 2,000 missiles a year. That's $8 billion in annual revenue from this single product line once they hit full production by the end of 2030. But Ukraine is just the beginning. 16 other countries operate Patriot systems. Sweden, Qatar, Japan, Poland, and a dozen others. Every single one of them is looking at the same threat environment and coming to the same conclusion. They need more interceptors. In September 2025, Lockheed landed a $9.8 billion contract for 1,970 missiles. That's the largest single order in Patriot history. The Pentagon isn't ordering these for fun. They're seeing a world where air defense has become the difference between winning and losing. The geopolitical backdrop is driving this demand into the stratosphere. Russia's invasion of Ukraine exposed a critical vulnerability. Western militaries had let their stockpiles run dangerously low. The assumption was that major conventional wars were a thing of the past. Ukraine proved everyone wrong. Now you've got NATO countries scrambling to rebuild inventories while simultaneously supplying Ukraine. The Middle East is another powder keg. Iran just received reports of Russian Iskander missile systems. Israel's shooting down hundreds of Iranian missiles and drones. Every interception depletes stockpiles that take months or years to replace. Then there's China and Taiwan. The Pentagon is gaming out scenarios where air defense becomes absolutely critical. If conflict breaks out in the Taiwan Strait, you're looking at massive missile barges that would overwhelm current defenses. The U.S. military knows this. That's why they're not just buying more Patriots. They're fundamentally restructuring how they acquire weapons. This new framework agreement represents a complete shift in defense procurement strategy. Here's what makes this deal revolutionary. Traditionally, the government would order missiles in smaller batches, year by year. Contractors couldn't invest in major capacity expansion because they didn't have long-term visibility. This 7-year framework changes that equation entirely. Lockheed knows they've got guaranteed demand stretching to 2032. That gives them the confidence to invest billions in new tooling, automation, and workforce expansion. The Pentagon is essentially saying, we'll give you longer, larger, more predictable contracts if you deliver on time and invest in capacity instead of stock buybacks. Speaking of stock buybacks, Trump just threw a wrench into the entire defense sector. He signed an executive order blocking defense contractors from issuing dividends or buying back shares until they address production bottlenecks. Wall Street freaked out initially. Lockheed dropped almost 5%. But here's what the market missed. This isn't bearish for defense stocks, it's massively bullish. The government is forcing these companies to reinvest every dollar back into production capacity. That means more factories, more workers, more efficiency. And once those investments start paying off, the earnings growth is going to be spectacular. Let's talk numbers. Lockheed Martin's stock closed around $520 on January 8th. That's up from mid-400s just days earlier, bouncing back after Trump's announcement triggered a brief sell-off. The stock hit an all-time high of $593 last October. Analysts have price targets ranging from $430 to $590, with the average sitting around $525. Most of that analysis was done before this Patriot deal was fully priced in. Here's my take. The market is still underestimating what this production ramp means. Lockheed's missiles and fire control segment is about to become a cash printing machine. They're not just tripling Patriot production. They're also ramping up GMLRS rockets, Atacms missiles, Javelin anti-tank systems, and a dozen other munitions that are all seeing unprecedented demand. The company's backlog hit a record $251 billion. That's not a typo. $250 billion in orders waiting to be filled. The beauty of this business model is the visibility. These aren't speculative tech bets where you're hoping for adoption. These are ironclad government contracts with inflation protection built in. The Pentagon agreed to collaborative financing that preserves cash neutrality for Lockheed while they scale up. Translation: the government is helping fund the expansion without requiring massive upfront capital from Lockheed. The risk is minimal. The upside is enormous. Now let's compare this to the broader defense sector. Northrop Grumman is trading around $553 with a backlog of $78 billion. They're growing steady but slower than Lockheed. RTX, the old Raytheon merged with United Technologies, is around $185 with a $251 billion backlog. They make the radar systems for Patriot while Lockheed makes the missiles. Both companies benefit, but Lockheed is getting the lion's share of the interceptor revenue. General Dynamics is another player, more focused on ships and submarines. They're all up this year, but Lockheed has the most direct exposure to the air defense boom that's unfolding. The global air defense market is projected to hit $65 billion by 2030, growing at over 5% annually. But that's conservative. Those projections were made before Ukraine demonstrated just how critical layered air defense has become. Before Iran started launching missile barges at Israel. Before China started flying hundreds of drones near Taiwan. The real growth is probably double those estimates. Here's what most investors don't understand about defense spending. It's not discretionary. When you're facing existential threats, you don't cut the defense budget to save money. You increase it. Trump just proposed a $1.5 trillion defense budget for fiscal 2027. That's up from about $900 billion today. Even if Congress only approves half that increase, we're talking about hundreds of billions in new spending. And a huge chunk of that is going toward munitions replenishment and air defense modernization. The supply chain is another critical factor. Lockheed isn't doing this alone, that they're working with hundreds of suppliers to scale up components. The Pentagon specifically mentioned 7-year subcontracts to ensure supply chain investments. This creates a ripple effect throughout the entire defense industrial base. Small and mid-cap companies that make specialized components for Patriots are about to see their revenues explode. If you're looking for higher risk, higher reward plays, that's where you dig. But let's focus on Lockheed. The company has four main business segments. Aeronautics makes the F-35 the most expensive weapons program in history. That program alone generates steady revenue for decades. Rotary and Mission Systems makes helicopters and naval systems. Space handles satellites and missile defense. And Missiles and Fire Control, which includes Patriot, is about to have its best decade ever. The F-35 program is crucial context here. Lockheed delivered 191 F-35s in 2025, a record. That's $20 billion plus in annual revenue from one platform. The F-35 has a backlog stretching to 2050. Combine that with the Patriot surge, and you've got two mega programs both hitting peak production simultaneously. This isn't a company dependent on one product. This is diversified defense dominance. Financial metrics matter. Lockheed's PE ratio is around 29. That's expensive for a traditional industrial, but cheap for a company with this growth trajectory and contract visibility. They pay a 2.7% dividend, $13.80 per share annually. Even with the Trump restrictions, that dividend is safe because it's modest relative to cash flow. Free cash flow generation is robust, around $7 billion annually. Once Patriot production hits full stride, I'd expect that number to grow significantly. The bear case? Well, production risk is real. Scaling from 600 to 2,000 missiles means tripling your workforce, your factory space, your quality control processes. Lockheed says they can do it by end of 2030 using existing facilities with added automation and workers. But aerospace manufacturing is complex. Supply chain disruptions, labor shortages, quality issues, any of these could delay the ramp. However, Lockheed has a proven track record. They've been increasing Patriot production consistently for 2 years without major problems. There's also political risk. What if the war in Ukraine ends tomorrow and demand collapses? Unlikely, but possible. Here's the thing though. Even if Ukraine signed a peace deal next month, the lesson has been learned. European NATO members are rearming regardless. Poland, Germany, Romania, they're all massively increasing defense budgets. The threat from Russia doesn't disappear with a ceasefire. And that's just Europe. The Indo-Pacific is becoming an arms race. Japan is rearming. Taiwan is desperate for every defensive weapon they can get. The Middle East is a perpetual tinderbox. Demand for air defense isn't going away. Congressional risk is another factor. The deal requires congressional appropriations. But defense spending is one of the few truly bipartisan issues left. Republicans want a stronger military. Democrats don't want to be seen as weak on defense. The votes are there. And with Trump pushing a massive defense budget increase, the tailwinds are unmistakable. Competition could theoretically emerge. But Patriot is the gold standard of air defense. Competitors exist, sure. Israel's Iron Dome, Russia's S-400, European systems. But for American allies and partners, Patriot is the system of choice. It's proven, it's interoperable with NATO, and it's got decades of support infrastructure. Switching would be incredibly costly and time-consuming. Lockheed has a moat that's measured in decades of integration and training. Technology risk is minimal. The PAC-3 MSE is cutting edge. It uses hit to kill technology, meaning it destroys incoming missiles through direct impact rather than proximity detonation. The kinetic energy transfer obliterates the target. This isn't experimental tech. It's been combat proven against hypersonics. Russia keeps trying to overwhelm Ukrainian Patriots with saturation attacks and advanced missiles. The success rate is impressive. Not perfect, nothing is, but good enough that everyone wants them. The earnings call in late January is going to be crucial. Management will provide updated guidance incorporating this Patriot deal. I expect them to raise revenue and earnings projections significantly. The stock could easily spike 10 to 15% on strong guidance. Conversely, if they're conservative or highlight execution risks, you could see a pullback. But long-term, the trajectory is clear. Let's talk portfolio strategy. If you're looking for a pure defense play with maximum exposure to the air defense boom, Lockheed is your answer. It's a large cap, liquid, established company with minimal bankruptcy risk. You can buy it in a retirement account and sleep well. For more aggressive investors, consider pairing Lockheed with smaller suppliers. Companies making radar components, guidance systems, rocket motors. Those could be 10 baggers if Patriot production really takes off. But do your research. Small cap defense can be volatile. Another angle is ETFs. The iShares US Aerospace and Defense ETF, ticker ITA, is up over 50% in the past year. It holds Lockheed, RTX, Northrop, Boeing, all the majors. That gives you diversified exposure if you don't want to bet on a single company. The downside is you're diluting your upside. If Lockheed crushes it, your returns are muted by the ETF's other holdings. Options are interesting here. Long dated call options on Lockheed could deliver outsized returns if the stock breaks out above 600. But options are risky, especially in a sector that can get whipsawed by political headlines. If you don't understand options, stick with shares. If you do, consider a bull call spread to limit your risk while capturing upside. Timing matters. Right now, defense stocks are at or near all-time highs. Some people will say wait for a pullback. But with Trump pushing a 50% defense budget increase, with wars raging on 3 continents, with air defense demand hitting record levels, waiting might mean missing the move. Dollar cost averaging is always smart. Buy some now, buy more on any dips. Don't try to perfectly time the bottom. Catalyst calendar for the next 6 months. Late January, Lockheed earnings. March, fiscal 2026 defense appropriations finalized. Mid-year, we'll see the first production increases from the Patriot ramp kicking in. By end of year, hopefully we have visibility into fiscal 2027 budget, which Trump wants at $1.5 trillion. Each of these is a potential stock catalyst. Risk management is critical. Don't put your entire portfolio into one defense stock, no matter how bullish the setup. Diversify across sectors. Keep some cash for opportunities. Use stop losses if you're trading actively. Defense stocks can be volatile. One Trump tweet can send them down 5% in a day. If you're long-term focused, that volatility is noise. But manage your position, sizing accordingly. The macro environment supports this trade. Inflation is moderating, but still elevated, which helps defense contractors with inflation-adjusted contracts. Interest rates are coming down, which reduces borrowing costs for companies investing in capacity expansion. The economy is growing, which means government tax revenues support higher defense spending. It's not a perfect setup. Nothing ever is, but the stars are aligning. Geopolitical wildcards could accelerate this trend. If China moves on Taiwan, defense spending goes vertical. If Iran and Israel go to full-scale war, same thing. If North Korea does something crazy, you guessed it, more defense spending. The world is arguably more dangerous now than any time since the Cold War. That's terrible for humanity, but it's rocket fuel for defense stocks. Think about the 2030 time horizon. By then, Lockheed will be pumping out 2,000 Patriots annually. The F-35 program will be in full global deployment. Hypersonic weapons, space-based sensors, next-generation bombers. All these programs will be hitting their stride. Lockheed's revenue could easily be over $100 billion. Right now, it's around $87 billion. That's 15 to 20% growth over 5 years. For a company this size, that's exceptional. Shareholder returns matter. Even with the buyback restrictions, Lockheed generates massive free cash flow. That cash has to go somewhere, that if they can't buy back shares, they'll invest in growth projects with high returns. New factories, new technology, new products. That investment drives future earnings growth, which drives stock appreciation. Long-term shareholders win either way. The only losers are short-term traders who wanted immediate buyback announcements. Compare this to the tech sector. Everyone's chasing AI stocks with crazy valuations and uncertain business models. Meanwhile, Lockheed is trading at a reasonable multiple with ironclad government contracts and proven products. Which is the better risk-adjusted return? I'd argue defense right now offers better value with less downside risk. Tech could crater if the AI bubble pops. Defense has a floor because governments will always need weapons. Let's address the ethical dimension. Some investors avoid defense stocks for moral reasons. That's a personal choice, and I respect it. But understand that these weapons systems are defensive. Patriots protect civilians from missile attacks. They don't invade countries or target non-combatants. Ukraine is using them to defend cities from Russian bombardment. Israel uses them to intercept Iranian missiles. These are legitimate defensive applications. You can make a strong moral case that air defense saves lives. The workforce angle is important too. Lockheed is about to create thousands of high-paying manufacturing jobs. They're investing in communities, training workers, building domestic capability. At a time when manufacturing is leaving America, defense is one sector that's growing here. That has economic and political implications. Politicians love ribbon-cutting ceremonies at new factories. Expect Lockheed to get favorable treatment for both parties. Supply chain reshoring is another trend. The pandemic exposed how fragile global supply chains are. Defense is leading the push to reshore critical manufacturing. Lockheed's Patriot expansion will drive investment in American suppliers. Semiconductor fabs, precision machining, advanced materials, all these industries benefit. It's a virtuous cycle for the U.S. industrial base. Energy implications are interesting. Defense production is energy intensive. As Lockheed triples output, they'll need more electricity. That's bullish for utility stocks and energy infrastructure. Not a direct play on Patriots, but a secondary effect worth noting. The entire industrial ecosystem shifts when a major manufacturer ramps production this aggressively. Let me give you the 30-second elevator pitch. Lockheed Martin is tripling production of the world's most in-demand air defense missile. Demand is outstripping supply by orders of magnitude. They got a 7-year guaranteed contract framework. Global geopolitical tensions ensure sustained demand through the end of the decade. The stock is reasonably valued with significant upside. Political and congressional support is bipartisan. Execution risk exists, but is manageable given their track record. This is a rare combination of growth, visibility, and reasonable valuation in the defense sector. So what do you actually do? If you're a conservative investor, buy Lockheed shares and hold for 5 years. Set a price target around $700, which implies roughly 35% upside from current levels. That's achievable if they execute on Patriot production and broader defense spending continues to grow. Take profits along the way if you want, or just hold and collect the dividend. If you're aggressive, consider leverage plays through options or concentrated positions, but size appropriately. Don't bet the farm on any single stock. Even the best setups can go wrong. Use this as a core holding, but diversify around it. For traders, watch the January earnings call for guidance revisions. Watch congressional appropriations in March. Watch any geopolitical flare-ups that could spike defense demand. Those are your entry and exit triggers. This stock can move fast on news. The bottom line is this. Lockheed Martin just secured what could be the defense contract of the decade. Tripling Patriot production isn't just a capacity increase. It's a strategic repositioning for a world where air defense is paramount. Ukraine changed everything. The old assumptions about defense needs are gone. The new reality is massive sustained investment in defensive systems. Lockheed is at the center of that shift. The opportunity is massive. The risks are manageable. The timing is right. This is what smart defense investing looks like in 2026. Don't sleep on this. Wall Street is still figuring out what this deal means. By the time consensus catches up, the easy money will be gone. Get positioned now, hold through volatility, and let the geopolitical tailwinds do the work. This isn't financial advice. Do your own research, but if you're looking for a high-conviction defense trade with years of runway ahead, Lockheed Martin and the Patriot production ramp is it. The world is dangerous, air defense is critical, and the company making the best interceptors just tripled their capacity. Connect the dots and position accordingly.